sessions through the end of the year. So as these go on, if you come up with more questions and you talk to, you evaluate your options with financial advisors, et cetera, you're welcome to attend later sessions as well. So there's no limit on the number that you can attend. We're good now? They can hear? All right, so I'm going to do the intro just once again for all of those who are attending virtually. Welcome to our first Employee VRS informational session. As I mentioned, this is a session that takes the tone of educating you as an employee about the VRS options, given that City Council has now made the affirmative decision to transition to the Virginia retirement system. So I'm very pleased to welcome Sally Godsey from the Virginia Retirement System. She will be talking to you today about the VRS hybrid plan, which is a plan for those of you who are general employees with no prior VRS service. If you are a general employee with prior hybrid plan service, or if you are just here to learn more, you are welcome. For those who are attending virtually, there will be an opportunity at the end to ask questions. We have somebody who's monitoring the chat and we'll see you if you raise your hand. So we'll try to get questions answered at that time and let you know when the floor is open. And Kia, I'm going to introduce you one more time for those who are attending virtually. Kia Johnson from the Richmond Retirement System is in the room and can speak to any RRS specific questions. So with that, I'm going to turn it over to Sally to give the presentation.
Thank you, Louisa. So again, good morning and welcome to this presentation on the VRS Hybrid Retirement Plan. The VRS is the overall plan administrator for the Hybrid Retirement Plan. We do have a third-party record keeper, Mission Square Retirement, who will be at some future sessions. And again, as Louisa said, there will be multiple sessions of this presentation, so please feel free to attend as many as you would like. There will be some more with Mission Square. So VRS is the overall plan administrator, and in the hybrid plan, there are two parts to the plan, which we'll talk about in a minute. So Mission Square is our third-party record keeper for what we call DCP, or the defined contribution plans. Today, we're going to learn about the hybrid plan, how it's structured, who's in the plan. We'll talk a little bit about investment options, your benefit payment and distribution options, and some other things to consider about your benefits related to the hybrid plan. And then we'll touch on what your resources and account access would be. First of all, as Louisa mentioned, the hybrid plan applies to all VRS members who have no service prior to January of 2014 in their record. So all people who are hired new under the VRS after January of 2014 would be in the hybrid plan with a few exceptions. The main exceptions would be anybody who's in a hazardous duty position. The plan does not cover hazardous duty positions. The hybrid plan has two parts to it, and this is kind of the basis of the plan, is learning about these two different parts. There is a defined benefit component to the plan and a defined contribution component. And we frequently use those abbreviations, DB for defined benefit and DC for defined contribution, to talk about these two different parts of the plan. And it's important to sort of get down these two different parts because they work very differently, but they make up the plan in total. The defined benefit part of the plan is sort of the foundation of the plan. This is the part of the plan where when you meet the age and service requirements, you can retire and receive a lifetime pension benefit. Important to know is that VRS is responsible for managing the investments and risk associated with this part of the plan. So while you will make contributions, your employer makes contributions, the VRS trust fund is where these benefits are paid from. The defined contribution part of the plan is different. It is a tax-deferred savings program where you and your employer contribute to the plan. The money is put in accounts where it's invested. And it's very important to know that on this part of the plan, you are responsible for managing the risk, for picking those investments and managing the risk associated with those funds. That defined contribution component of the plan is the part where Mission Square is the third-party record keeper. They handle all of the transactions related to that defined contribution part of the plan. Hybrid members make mandatory contributions to the plan. The mandatory contribution is 5%. You also can make additional voluntary contributions. This contribution illustration page gives you a really sort of good summary of where all the money goes when you make your contributions. On the left-hand side of the page, you will see the defined benefit part of the plan. Of your 5% mandatory contribution, 4% goes into the defined benefit member contribution account. That's in that pension part of the plan. That money goes to VRS. Your employer also contributes to that part of the plan, and that money goes into the VRS trust fund. It is not allocated to individual employees. On the right-hand side, you'll see the defined contributions. And you see there are 4 different little buckets there. In that part of the plan, 1%, so of your 5% mandatory, 4% for DB, but your other 1% goes into the defined contribution part of the plan into the what we call the hybrid 401A cash match account. So your mandatory 1% and your employer will put in a mandatory 1% contribution goes into that 401A account. This is the part of the plan where you can make voluntary contributions. Those voluntary contributions can range from 0.5% to 4%. If you make voluntary contributions, your employer makes additional matching funds. So your voluntary contributions are put into a separate account called the Hybrid 457 Deferred Comp account. The employer match for those voluntary contributions still goes into the Hybrid 401A cash match account. So you can see that in that part of the plan, if you make more contributions and your employer puts more money in too. This is another chart that sort of breaks down these contributions. It shows you on the right, you're always going to be making that 4% contribution that comes to VRS for the defined benefit part of the plan. But that section in the middle shows you that you can, you are going to put in the 1% mandatory in the DCP part of the plan. Your employer puts in the 1% mandatory. But then if you make voluntary contributions, your employer's match varies based on what your voluntary contribution is. And we want to just mention a little bit the importance of saving for retirement. And this graph here shows you sort of the difference in how money can accumulate over time based on whether you don't make voluntary contributions or whether you make voluntary contributions at different rates. And of course, as you can see, the more money that you put in for voluntary contributions, the more your employer puts in, and over time that builds up to much bigger balance at retirement. There's a way when you are in the plan, if you don't start your voluntary contributions right away, let's say you don't feel comfortable putting in 4% right away, there's a way you can set it up to increase automatically once a year. You can choose when it's going to change and the percentage it would change by. There's also a feature in the plan where if you're not making that maximum 4% voluntary contribution, every 3 years, there's an automatic increase of 0.5%. So this is sort of a way to try to get you to the 4%. But again, it only happens every 3 years. So it takes a really long time to get to that 4%. It's always preferable to try to make those changes on your own, but just be aware that the plan does have this automatic feature. We just had one in this year, January of 2023, so the next one won't occur until 2026. You do get notified of this towards the end of the year. You do have an option to opt out of that if you don't want that increase to occur. And then we want to talk a little bit about the importance of saving. Again, remember when you retire, you have Social Security benefits. And if you are, retiring from this plan, you have the defined benefit part of the plan. But those two sources alone are probably not sufficient. So it's important that you save on your own in other ways. So that's where the defined contribution part of the plan comes in, and that option to make those voluntary contributions and get the additional match. Personal savings is taking a bigger and bigger role in retirement in general. It used to be that people relied on what was called the three-legged stool, where your pension benefits and your Social Security benefits and your personal savings would be enough to retire on. And in more recent times, what we've found is that people those sources aren't enough, and that a lot of people are having to work after they retire and get supplemental income from other sources. So again, it's important to save as much as you can for retirement. This graph here is just sort of an illustration of the importance of trying to save as much as early as possible. This graph here shows you two people who started saving at different times. The person on the left, who's called Sarah, she started saving early in life and only saved for about 15 years, and then she stopped. And the person on the right waited and saved for a longer period of time. They put more money in, and they're putting in the same amount of money, but he put it in over a longer period of time. So he contributed more, but at the end of the day, he has less money because the money wasn't invested as long. And so this sort of illustrates the advantage of saving early as much as possible. All of the contributions to the hybrid plan are made on a pre-tax basis. That means that the contributions come out of your check for the plan before your taxable income is determined. This slide here just sort of illustrates the difference in your take-home pay and the advantage of saving on a pre-tax basis. It has less of an impact on your current spendable income when you save on a pre-tax basis. In the defined contribution part of the plan, in that hybrid 457 account where your voluntary contributions go, you can roll in funds from other accounts into that account if you'd like. It has to be pre-tax money. And if you roll over money into the plan, you do have access to rollover funds only. The contributions that you make while you're active, all the funds in your member contribution account and your hybrid 401A and your hybrid 457, there are no provisions for loans or withdrawals from those accounts. You can only access rollover funds. And if you have maximized your savings in the hybrid plan, if you make that full 4% voluntary contribution and you have some more money you want to save, then we encourage you to save in other places. Y'all have another supplemental additional 457 that the city provides. So you can always save more in that plan too. And we're very briefly going to just talk about investments. Sort of generally, you have different classes of investments. You've got cash equivalents, which is and stable value investments, which is sort of short-term timeframes. They have less risk, but they typically have less return. Bonds are sort of in between and can be used for various investment choices, like to keep pace with inflation. It's usually sort of between cash equivalents and stocks. It's basically loans to organizations where they pay interest. And then stocks, of course, is ownership in companies. Stocks can provide higher investment returns, but they also have a higher degree of risk. So this is just sort of a general, certain asset classes that you might invest in. In the hybrid plan, in that defined contribution part of the plan where you have to decide how you're going to invest the money, there are what we call 3 pathways that you can choose from. You can mix and match among these pathways. There's the do it for me path, the help me do it path, and the do it myself path. The do it for me path is comprised of what's called target date funds. These are funds that are professionally managed where the money, the people who are managing those accounts rebalance the accounts over time. And as you get closer to the target date that you're invested in, the investments become a little bit more conservative. And eventually as you reach a target date, it would fold into the retirement portfolio. This is sort of where if you're at a target date fund, somebody else is doing that rebalancing and you just don't have to sort of worry about it. It's sort of more of a hands-off approach. You will default into a target date fund closest to age 65. And then when your money first goes into the plan, and then it's up to you to make changes if you want to be invested differently. You don't have to stay in the one closest to age 65. You can pick whichever one of the ones you want. There's more information on the website about these options. The Help Me Do It path gives you specific types of funds that you can invest in. Again, you get to pick and choose how you want your money. If you want it invested in some of these funds, you can pick and choose. You can have some of your money in some of these funds and some of it in target date funds. It's totally up to you how you manage those investments. And then once you've got enough money in the plan, if you really want to do hands-on investing, you can set up a self-directed brokerage account. And we would encourage you to, this is for people who really are comfortable really being hands-on managing the funds. And that is also an option. And there are some requirements about these self-directed brokerage accounts that you'd want to explore with Mission Square if you want to set one of those up. There are fees associated with the defined contribution part of the plan. There is a fee of $30.50 a year. That is a record-keeping fee. That's about $2.54 a month. That comes out of your account every month. And then there are investment management fees. So all of those funds have fees associated with them that the costs of running those investment funds. There's information available on the website on all of the investment choices and what the fees would be for each one of those funds. Okay, so we're going to shift our attention now back to the defined benefit part of the plan. So all of that information on investments is that defined contribution part of the plan, your 1% mandatory, your employer's 1% mandatory, your voluntary and employer match. That's all investment money in the defined contribution part of the plan. But now we're going to look at the defined benefit part of the plan, where you have that lifetime pension benefit. You have to have 5 years of service credit in the VRS to be vested in this lifetime pension benefit. The benefit is calculated using a formula. The formula is 1% times your years of service credit times your average final compensation. Your average final compensation is a 5-year average. It's the average of the 60 consecutive months of your VRS salary history that gives the highest average. When we calculate this benefit, divide by 12, that's your unreduced benefit. In other words, when we calculate that benefit, if you're eligible for an unreduced benefit, you get the amount of that formula. If you retire early, there is an early retirement reduction factor applied. You can take a reduced early retirement benefit after you've reached age 60 and have at least 5 years of service and are vested. The unreduced benefit is payable at one of 2 different things. If you have service and your age added together totals 90, you are eligible for an unreduced benefit. For example, if you're age 60 with 30 years of service, you can get an unreduced benefit. If you are 58 with 32 years of service, or if you're age 62 with 28 years of service. As long as your age and service added together totals 90, you get the full amount of the formula. The other way you get the unreduced retirement benefit is when you reach your Social Security normal retirement age and you have at least 5 years of service credit. Your Social Security normal retirement age is based on your year of birth. When you actually retire on that defined benefit part of the plan, you do have some options available in how that benefit is paid. The amount that's calculated by the formula is what we call the basic benefit. That benefit is payable to you for your lifetime, and after your death, the benefits would stop. You have an option to take a survivor option. This means you would have a reduced benefit. There will be a reduction factor applied, but your benefit then would continue to the person you've named survivor at retirement. So it provides a benefit for someone else's lifetime after your death. The partial lump sum option payment has some special requirements. To be eligible for the partial lump sum option payment, you have to actually work 1, 2, or 3 years past your unreduced retirement date. If you've worked those 1, 2, or 3 years, then you can get an upfront payment of 1, 2, or 3 years worth of your basic benefit. Because you get that lump sum payment up front, though, it means that your monthly benefit ongoing is reduced. You can take the partial lump sum option payment in conjunction with the survivor option. The advanced pension option is a standalone option and is designed for people who retire prior to their Social Security normal retirement age. It gives you a way to have a temporarily increased benefit for a certain number of years until the date that you've chosen. And then at that time, when you think your Social Security benefits are going to start, there's a permanent reduction in your benefits. One question that frequently comes up is what happens if I leave my position? Well, if you leave your VRS position, you can leave your money in your member contribution account. Remember, that's the account where your 4% mandatory contributions going, that's record kept at the Virginia retirement system. As long as you leave that member contribution account in the plan, you are a deferred member of the plan. Even if you're eligible to retire, you can defer receipt of that benefit if you want to. If you're not eligible to retire, but you are vested, meaning you have over 5 years of service credit, then you are vested in whatever benefit has accrued based on your service that you do have. That benefit would be payable at your unreduced retirement date. And as long as you leave your funds in your member contribution account, you keep your rights to that lifetime pension benefit and can start that benefit when you meet the eligibility requirements. Even if you are not vested, as long as you leave your money in the member contribution account, you keep your membership in the hybrid plan and the VRS service credit that's in your record. That means that if you have left, and then if you come back and you've left that money there, you would come back in the hybrid plan and sort of pick up where you left off. If you want to take the member contribution account out of the plan, however, when you leave, you can do that. That member contribution account is based on your 4% mandatory contribution and interest. But if you take that money out of the plan, that's what we refer to as taking a refund. If you take a refund, you will forfeit all of your VRS benefits. So if you're eligible to retire, you'll forfeit your retirement benefit and any other retiree benefits you might have, like retiree life insurance. If you are just vested, you would forfeit your lifetime benefit you've earned. And regardless of whether you're vested or not, if you take that money out, you forfeit all of your service credit and your membership. So if you do that and then you later come back to a VRS covered position, you would be starting all over again with zero service in your record, and you will be covered by whatever plan happens to be in effect when you come back. The money is pre-tax. So again, you want to consider tax implications when you take that money out. Since it's pre-tax, it is eligible for rollover. Of course, if you take it as a taxable distribution, you're going to owe taxes and potentially, if you're under age 59 and a half, an additional 10% tax for taking the money out of the plan early. If you take a refund, there's also the possibility, depending on your service credit, that you will forfeit some of the money in your defined contribution part of the plan. So if we switch back over to that defined contribution part of the plan where you've made contributions and this is the investment part of the plan, you have to become vested in the employer contribution portion of that hybrid 401(a) cash match account. Remember that you're always vested in all of the funds in the hybrid 457 plan because that's based on your voluntary contributions only. But in that 401(a) account, that's based on money you've put in as well as money the employer has put in. The vesting for this part of the plan for that defined contribution account, you are 50% vested after 2 years, 75% after 3 years, and 100% after 4 years. So if you leave and you want to take funds out, you have these potentially 3 accounts. You have the member contribution account and the defined benefit part of the plan. You have the hybrid 401(a) in the defined contribution part for your mandatory 1% and all the employer money. And you have your hybrid 457, which reflects your voluntary money only. You don't have to take all of them out. You can pick and choose which ones you want to take out. So the hybrid 457, if you take that account out, it does not impact your membership at all. The hybrid 457 is not subject to the additional 10% tax if you take it as a taxable distribution. If you take out the hybrid 401(a), you forfeit the non-vested employer portion of the account. If you take a refund of the member contribution account in the defined benefit part of the plan, you will forfeit non-vested funds in the defined contribution hybrid 401(a), and you also will forfeit all VRS benefits and service and membership. So remember, it's 3 separate accounts and different things happen depending on which one you decide to take out. The defined contribution part of the plan, when you get to retirement and you've got this pool of money there of investment money, you have a lot of choices for that. You can leave the money in the plan and pull it out as you need it. You can set up monthly payments, and as long as there's money in the account, you can receive those monthly payments from the plan. You can roll the funds over. So there are a lot of options available when you do take that money out of the plan on the defined contribution side. A couple of things I think I forgot to mention. One thing I do want to mention is on those voluntary contributions, those are elected quarterly. So there is always a cutoff, the 15th of the month before the beginning of the calendar quarter. So the December 15th deadline to be effective January 1, March 15th to be effective April 1. And the 457, the hybrid 457, that is under section 457 of the tax code. You also have your other City of Richmond 457. So for IRS limits, just remember that those have to be added together because it's all under that same tax code. Okay, so we're going to talk about some other things now related to the hybrid plan. Purchase of prior service. On that defined benefit part of the plan, we talked about how your benefits based on the formula, the 1% times your years of service times your average final compensation. So the more service you have, the higher your benefit is. There are some very special situations where you can actually purchase service and have it added to your record. In order to purchase service, you have to be active. It is when you purchase that service, it goes in your record. It's used not only to calculate your benefit under the defined benefit formula, but it is also used to determine your vesting for both parts of the plan. When you purchase service, that service cannot entitle you to a benefit from another retirement plan. There are certain types of service that are unlimited. You can purchase as much as is available to you. If you have refunded service, for example, we talked about if you left and you took a refund, you forfeit your service and your membership and your benefits. Well, if you ever did that in the past, you might then you would have refunded service that you can purchase, and you can always purchase as much of that as is available to you. No cost military leave is not limited. That's something you would apply for when you returned from leave, and you would apply for that through your HR department. And then there are certain situations where you're not being reported when you're on a workers' comp leave, and when you return, you can buy you're eligible to purchase all of that service. The types of service listed here are limited. Of those 6 types of service, all of those types combined are limited to 48 months. So in other words, if you had 3 different categories where you could purchase service in this limited category, you are limited to 48 months from all of those categories combined. Public service, for example, let's say you worked in a different state for a state government and you have service in that retirement system with another state. Federal service would be civilian service with the federal government, and non-covered service would be wage service under a VRS covered employer where you were like not covered for benefits at the time you worked there. And then these types of special types of leave, where when you return from leave, you might have leave service you can purchase. All of those combined limited to 48 months. There's a third special category for purchasing service for active duty military service. If you had active duty military service and you don't have a military pension, you can purchase up to 48 months of that active duty military service. In order to purchase this service, you do have to pay for it. When you buy the service, the money that you pay for that service is put into your member contribution account in the defined benefit part of the plan, because it's going to increase your service, it's going to increase your retirement benefit, so it goes into that account where you're helping to fund that lifetime pension benefit. When you're first eligible to purchase service, you have a 2-year window to purchase that service at the plan's approximate normal cost. That means it's the cost of the overall plan for a year of service, and it's a known cost. After that 2-year window, the cost shifts to an actuarial basis. That means it's a more individualized calculation where it's going to take into account your specific age and salary and when you can retire and how much it changes your retirement date and retirement benefit. The actuarial cost can be much higher than the approximate normal cost. This cost window and cost basis does not apply for refunded service. Refunded service is a little different. For refunded service, you have to repay the amount of the refund you took plus interest. And that interest is compounded from annually from when you took the refund to when you pay it back. And you would have to contact VRS for that calculation. There's no cost window on this. You can purchase it at any time. It's just that interest cost is accruing the longer you wait. In order to purchase the service, you have a variety of ways to do this. You can purchase in a lump sum. You can use rollover funds from like an IRA or another account you might have elsewhere. You cannot use funds in your hybrid defined contribution plan that you have put in as an active employee. You can use rollover funds in your hybrid defined contribution plan. You can also set up a payroll agreement where the money comes out of your check every pay period. Payroll agreements have some special rules. You cannot have a payroll agreement for longer than a year. You can purchase 1, 2, 3, or 4 months per month during that payroll agreement. And you can also use a combination of these methods. We're going to talk a minute now about short-term and long-term disability. The VSDP plan is for state employees only, so that does not cover you. But you do have the Virginia Local Disability Program. This is a program that provides short-term and long-term disability benefits. It focuses on getting you back to work, and it does have a long-term care plan attached to it. We like to mention the VSDP and the VLDP and changing employers. VRS members sometimes change from one VRS employer to another. Your coverage under VLDP has a 1-year waiting period for non-work related short-term disability. If you ever change employer, VRS employers, just be aware that you have to resatisfy that 1-year waiting period for those short-term disability benefits, unless it's from one state agency to another with no break in service. Otherwise, you do have to have that 1-year waiting period. So you want to consider that in your planning, and you might want to consider purchasing some other type of insurance. Both VSDP and VLDP do have long-term care coverage. That would be like care in a nursing home or assisted living sort of situation. In the hybrid plan, you also are covered by the basic life insurance that VRS has. That's your base pay rounded up the next 1,000 times 2. And there are some other benefits associated with this, and we would refer you to the website for more detailed information. And you can also, of course, purchase the optional life insurance, which would come out of your cost would come out of your paycheck. The death in service benefit is related to the defined benefit part of the plan. This depends on whether or not you're vested and whether or not your death is work related or not. If you are vested, meaning you have 5 years of service or more, the benefit is going to depend a lot on who you've named as your beneficiary. If you specifically name a spouse, minor child, or parent in that order of precedence, and you pass away and you are vested, you pass away while you are active and you are vested, then in that order of precedence, the person highest in order gets the choice of a monthly benefit or a refund of what's in your member contribution account, to the exclusion of anyone else you've named. So if you were to name a spouse and a parent equally, only your spouse would be eligible to make that decision and to get a benefit. If your death is, if your named beneficiary is not in that category of those 3 people, then we're just going to pay a refund to whoever you've named as your beneficiary. There is no monthly benefit payable. If your death is not work related and you are not vested, you have less than 5 years of service credit, then we will just pay a refund to whomever you've named as beneficiary. If the death is work related, then there will be a refund paid to your named beneficiary, and then your spouse, minor child, or parent in that order of precedence would be eligible for a monthly benefit. In the defined contribution part of the plan, if you pass away, you would your beneficiaries would get the vested portion of whatever's in the account. And that leads us to your account access and other resources that are available to you. So we've talked about beneficiary designations. They're very important. They can all be done online. Because there are two parts to the plan, there are going to be 2 online accounts. The hybrid retirement plan has a special public website within the VRS main website, and it's at varetire.org/hybrid. We would encourage you to go to this website if you want to explore more information on the plan. There's some a lot of information about the plan itself. There are also some links to some general financial planning tools, information on just general financial topics that might be of interest to you. This site is also where you can access both of your online accounts. Your DCP account access is for your DCP accounts, those defined contribution accounts that are record kept at Mission Square. Your DCP account links to Mission Square, and then your My VRS account links to VRS. You would use your DCP account to name beneficiaries for your DC accounts. You would use My VRS to name beneficiaries for your life insurance and for your defined benefit member contribution account. This is the login page for the MyVRS. When you're in the hybrid plan, the homepage this is an example of a homepage. It will show you all of your account balances, your member contribution account and the defined benefit part of the plan, as well as your account balances at Mission Square in those defined contribution accounts. There is a little box in the upper right-hand corner that tells you whether or not you're making the maximum 4% voluntary contribution. All of that defined contribution information is just for informational purposes. You cannot do any transactions in your MyVRS account related to those defined contribution accounts. You can see estimates of your retirement benefit. There is a retirement planner tool you can use for overall retirement planning. There is a benefit estimator tool where you can run retirement estimates at various points in time. There will also be a link to VRS Financial Wellness, where you can explore other topics like insurance and credit. And this is linked to information that will provide things that might be of interest to you. So we would encourage you to explore that. When you do get ready to retire, you can actually retire online. It sort of walks you through step by step, gives you counseling at each step of the way. And then going back to that main hybrid website, the public page, the DCP account access, again, is where you would log into your account that is set up that links to Mission Square. This online account is used for your beneficiary designations just for those accounts, but you can also use this online account to sign up for or change your voluntary contributions or to make investment changes. Mission Square does have a number of regional representatives that you can meet with. And there's also a mobile app if you want to get information on your DC plans on your phone. Contact information, of course, again, remember in the hybrid plan, 2 parts to the plan, 2 record keepers, 2 sets of people to talk to. So the VRS has a call center. And the hybrid line, this 855-291-2285, that is a special line in our customer service center for hybrid members. And we're available 8:30 to 5 o'clock. There is an email address, but just be aware we do not accept any personal information by email. We only give very, very, very general responses to any emails that come in. Mission Square, again, they have a customer service number. Their hours are 8:30 to 9. You can use that number for making changes to your voluntary contributions or investment changes. So you can also do those things over the phone as well as in your online DCP account. There is a financial planning service available through Mission Square, and you can access that on the website and make an appointment with someone for some individual overall financial planning. And again, we would refer you back to the hybrid website. This has got a wealth of information. You can link to the handbook on this website. And this is, again, is the public website. You don't have to log in to access this or get any of this information. There is a learning channel that has some very short videos on it that will cover sort of the basics of how your contributions work. There are live and recorded webinars. So there's a recorded webinar in there that you can listen to. And there are upcoming sessions that you can register for. So we've covered a lot of information. So sort of the things that you want to make sure you do are in the hybrid plan. You want to make sure you've registered for MyVRS and that you've designated your life insurance and defined benefit beneficiaries. Always consider your life insurance and long-term care needs in case you need to purchase additional insurance. If you are eligible to purchase service, we encourage you to look into that sooner rather than later. You're never required to purchase service if we put it in your record. However, depending on the type of service, If it's like in another state, you do have to remove all funds and forfeit all benefits from the other retirement plan before you can apply to purchase that service. And then there's an application process you have to go through before that service is in your record and you can look at buying it. You want to make sure you've set up your DCP account access so you can access information on your defined contribution plans, make your beneficiary designations in that online account. We encourage you to always maximize to the full 4% voluntary contribution as soon as you can so that you're getting the maximum savings, the maximum employer match out of that part of the plan. And after you've done that, consider saving more in the Richmond 457 plan. And of course, on those investment accounts, you want to make sure you're reviewing your investments and making changes as time goes on, as things change, and you want to rebalance or make changes to how your funds are being invested. Okay, that was a lot of information to cover. Appreciate your patience getting through all that. And so this is the point where, we will take questions. Yes. Okay. Okay. First question. Yes. The city of Richmond 457. The question was money in the City of Richmond 457 plan. That money is in the City of Richmond plan. So that is sort of a standalone plan. And so that money stays in that account. Did I get that right? Yeah, okay, yes. Please.
All right, so for the 457 plan, that is your deferred compensation plan, your personal savings that's coming out your check, that stays with the city of Richmond. That part is not moving to VRS. You can move your 401, stop your 401A retirement plan and transition to VRS. So you can't move any money from your 457 to the new VRS plan if you decide to sign up for them. Does that? Okay. It's going to stay here anyway. So you're going to stay, if you are vested with the Richmond retirement system in April, and then let's say you decide to go to VRS in May, that money will stay in your 401A account until you separate city service altogether. You'll start day one with VRS, but with us, you would just leave that money there. It will stay in the Mission Square account. You can check on it. No money goes in. It does, there'll be gains and losses over time in it, but that money freezes until you separate service altogether. I can't tell you what to do, but it's up to you what you want to do. The longer you stay, of course, more contributions go into it. If you want to be, so I don't know if they've already talked about if you're not vested with Richmond Retirement System and you move to VRS, you still have to do 5 years with the city to get the money that's in there right now. So whether you move in January or April or even December 31st of 24, that money's going to stay with the Richmond Retirement System Mission Square account, that 401A, till you separate service. That money stays there. You can vest, you don't have to be vested. The money stays with Mission School. You can't pull it out. Yeah. Yes. Oh, yeah, unless you have prior service, like Louisa said. If you have prior service with the state, absolutely, you start wherever you left off. Sorry, yeah, sorry, she's two different plans. So no, you have to start day one with VRS. If you go in January 1, that's when you start with VRS to start your 5 years again. Richmond retirement system. Yeah. Yeah, so Richmond if you have 4 years and 9 months right now, and you move to VRS in January, you have 4 years and 9 months in Richmond retirement system. Huh? You
So your, let's say 4 years and 9 months you have at the point that you choose to move to VRS, you'll start, that's the point. So you start day one in VRS. But what Key is saying is if you continue to work with the city for 3 months, you will then, your benefits in RS are frozen. They just stay where they are. But as long as you work the additional 3 months, you make your 5 years, you'll then get access to that as a benefit. You'll kind of be vested after the fact in your RRS benefit, and you'll get two checks in your retirement from RS and from VRS. Mhm. So the question is if, you have a certain number of years in RRS, you choose to move in April when have 4 years and 9 months. And that's the scenario that we're talking about. You're not quite vested in RRS, but you're choosing to move over to VRS. You have two timelines there, right? You start in VRS day one at that 4 years, 9 months with the city, but your RRS account for 4 years and 9 months stays frozen there, and you will get access to it should you work for 3 more months. So you can vest after the fact in your RRS account, and then you would get it upon retirement, right? Or if you leave the city service. Can we take another question from the floor? Rob. Good question. So the question is, someone has 8 years with Henrica, which is VRS employer, and you moved to, was it the city that you took a job with? Okay, so different retirement system. Rolled over those VRS service years to the new retirement system. The funds. Okay. And so VRS will answer.
If I'm understanding your question correctly, so you were in the VRS and you left and you took a refund of your member contribution account. When you took a refund, you took the money out of the plan. Taking the money out of the plan means you took a refund. Doesn't matter what you did with it. If you took the money out of the plan, you took a refund. When you took that refund, you forfeited your membership and your service credit. So that's what we call refunded service. So if you come back into the VRS, you would want to look into that. You can purchase that service, but you would have to repay all of the money plus interest. And it doesn't change if you were in a different plan when you took that money out, but you come back in and you're going to be in the hybrid plan. Even if you purchase that service, you're still in the hybrid plan, but you can purchase the service in the hybrid plan if it's refunded service. Correct. The question was, if you don't purchase the refunded service, then it's not in your record. So you are starting over and you do have to work 5 years under the VRS to become vested. Okay, so the question is, if you had previous VRS service and you left VRS and you left your money in the member contribution account, what happens if you come back under VRS coverage? That's a question that is very individual. It depends on when you left and what plan you were in. But basically, if you have money in the VRS and you've left your money in your member contribution account, and then you come back under the VRS, you go back into whatever plan you were in when you left. So that is sort of it varies from person to person what that's going to mean. Yeah.
So the question is, if you've been with the city for 6 or 7 years, can you purchase your time from the city of Richmond? That is not eligible to be purchased, as I understand it. So VRS's normal purchase rules apply to any time that is not city of Richmond service time. Can we take a few questions from the virtual audience, and we'll get to the question back there. Or if there are any in the chat as well. If you are online, raise your hand.
Jessica Drasher, please unmute your mic and speak.
So Jessica Drasher, you have a question on the virtual audience. Go ahead and unmute yourself and ask your question.
Can you guys hear me now?
We can hear you.
Yes, I was just wondering how PVA is going to be affected by all of this, or if that's even an issue, or if I need to just get with Richmond Retirement System, reference that. And then my only other concern I was trying to get clarification on was being moved out of a sworn.
Ms. Drasher?
Yes.
Ms. Drasher, we're having a hard time hearing you. Can you adjust your audio a little bit, or maybe step back from the microphone?
This is the best I'm able to adjust things. Am I coming in better?
Can you type your question into the chat? That will help. We're just having a bit of an audio issue there.
Sure thing. I'll type it into the chat.
Okay, thanks. While we're waiting, we'll take another question in the pink. When is your start date if you choose to switch over, but you have the option of waiting to switch over, right? Okay, so current employees, all of you, have until December 31st, 2024 So is that the end of this year? No, it's the end of next year to make your decision. There's pros and cons to waiting. If you want to start right away on your years of service in VRS and get going, maybe you want to make your choice earlier and switch over sooner because your time in VRS starts as soon as you're in their system, right? If you really want to take some more time to evaluate your options, maybe you want to vest first in RRS and that's a consideration, then you do that. But we cannot advise you on what your choice is. You have to do your research on your accounts and make your own decision. So definitely talk to both plans and make that determination for yourself. You said, what is your start date? Oh, what's the soonest start date? So the soonest start date, if you're sure, is January 1st of 2024. And oh, yes, and for everybody's knowledge, we are working on election forms that will depend on what plan and RRS you're in. Those will be made available on a website, on a SharePoint site. We're finalizing those and we will send a mass email to everybody to let you know when those are available. And you will need to complete that form and then contact either retirement at rva.gov or human resources to talk to them and submit your election either to stay or to transition. Sir in the blue. The question is, if you have a 457 now with the city, and then you go to VRS, you have that 457 piece of the hybrid plan, can you contribute to both?
Yes, but you have to consider the IRS limits. You can't go over the limit based on what IRS sets each year. So you have to look at that and you have to be, consider that. So if you get to the 22,500 with the Richmond retirement system plan and you're getting close with the VRS plan, you have to make that decision on when to stop it. But yes.
Yeah, so just to add a little bit to that. So remember that your 457 in the hybrid is 457 money. Your 457 in the City of Richmond plans 457 money. So you have to sort of do some planning because in the hybrid plan, your 4% gets you the matching funds. So if you want to consider that, and if you're going to be close to that limit, you're going to have to just look at the numbers and adjust your contributions so you don't go over the limit. Yes, the hybrid plan. The question was how the IRS limits work with the hybrid plan. Again, the hybrid plan, the most you can put in is 4% of your pay. So in most cases, that will not hit the IRS limit. So then you have to sort of look at your other City of Richmond plan to determine how much more you can put into that plan so you don't hit the limit.
Jessica Drasher asked, how is PBA going to be affected? And what happens to those of us that have been moved out of a sworn PD position and into a civilian non-exempt position?
Okay, so the question is if you move from a sworn position to a civilian position, as I understand it, right? Okay, so I would.
Hi, Jessica. This is Kia with the Richmond Retirement System. That's more of a, I would say, personal that we'll have to we have to look at that and talk to you personal. So give me a call on that. I think we've spoken in the past, but if you just give me a call and we can discuss that, because I don't know how it relates to the VR, like move transition into VRS.
Melvin Leon? Leon Melvin, please unmute and ask your question. Thanks.
Good morning. My question is, there has been two scenarios. In one of the first meetings, we were told that when we go into VRS, that'll be our day one, regardless of how long we've been with the city. And I have heard that in another session, it was stated that our years of service was when when our hire date was. Can you let me know how that, what will be my start of years of service? Because I've been here 16 years. I'm 48. I don't want to wait till I'm 70 to retire, because the 70 plus 20 is the 90 that's required for the VRS. So I'm looking for some info on that.
Okay. So this is VRS. The first thing I want to address is that rule of 90 is not the only way you qualify for retirement. You also qualify when you have 5 years of service credit and are at your Social Security normal retirement age. So it's definitely not going to be age 90. So the latest. Hello? It's okay.
Yeah.
So the latest retirement date is going to be your Social Security normal retirement age, which at this time is age 67 for anybody born in 1960 or later. So if you're age 67 with 5 years of service, that makes you eligible for a full retirement benefit in the hybrid plan.
Okay, but again, the basis of my question was my years of service. If I do enter this VRS, does my years of service within this VRS system start from January next year, or does it start with my hire date, which was back in 2007?
So it starts January 1 is when the clock starts in VRS if you choose to switch on January 1. Or if you choose to switch on March 3rd, your service starts in VRS on March 3rd, at day 1 for you. But it does not mean that you have lost any years of service with the city for Richmond retirement system purposes. That will stay put in RRS. And when you retire, that will become available to you. Does that make sense to you?
Okay, I got
Okay.
that. So for clarity, my years of service if I change over to this VRS, starts next year whenever I decide to go into it, correct?
Correct.
Okay, thank you.
We'll get to Katrina, we'll get to you. Let's take another virtual audience question.
Tim Gerber, you can ask your question if you unmute your mic.
Good morning. How are y'all? I just wanted to know, when would be the first date that we could sit down with somebody to set this up? And do we have to do it online, or are we able to do it with someone?
So if you know by January 1st of 2024 that you want to switch to VRS, or you know that you want to stay in RS, you can make that choice, as soon as we have the forms available. But if you are choosing to move to VRS, the first date that will happen is January 1st, 2024.
Okay, because it seems to me like I'm a new employee. I've only been here for 1 year, so it's good for me because I don't have much time. So it just seems like it's maybe not so good for people that have been here for quite a while. That's just the way I'm getting it.
Well, everybody, again, we cannot advise one way or the other. Again, you have to make your own decision. It's completely up to you. That, that may be true for some people, definitely, and it could be not true for others. So you need to talk to the plans if you still have questions to really evaluate your numbers and your options, right? Does
Yes, ma'am.
everybody understand that? Okay,
That-
awesome.
So will
Thank you very
somebody
much.
sit down with us to do this? I mean, somebody will have like papers we fill out, or do we do it with your website? That's the thing.
Okay, I'm gonna hand it to VRS to, sign up. Okay, Kia.
So as soon as there's a form available for everyone, we will email that out. We're also going to mail some forms out, and we'll have some for every single employee. Every single employee will have to fill out a form, wet signature, sign it, and witnesses to say either you're going to stay with the Richmond Retirement System or you're going to move to a VRS, um, uh, the plan that that you'll be going into, either the hybrid plan 1 or 2. So everyone will have to do that. If you're asking if you want like specific counseling sessions, I think there will be some financial advisors available at some of these sessions, or you'll be able to sign up to talk to someone about your choice. But we won't be able to make the choice for you, but there will be people that you will be able to talk to during this time.
Thanks, Kia.
Okay.
And, just to piggyback on that, to let you know, we are working on bringing on a third-party consultant to help provide coaching and advisement around retirement. We will be absolutely informing you of when that becomes available, hopefully very soon in the next weeks. Until then, you can contact VRS if you have VRS specific questions with the contact information they've provided, and then you can also contact RRS, Kia here, and retirement@rva.gov.
Thank you.
Okay. Let's take some. Katrina was next back in the back. Will there be any changes to your RRS plan if you choose to stay with RRS as far as contributions go? The answer to that is yes. So as mentioned in the information sessions prior to the transition being approved, part of this requires a change in employee contributions that will be effective at the beginning of next year, where all employees in every plan in RRS, and it's also true in VRS, but let's stick with RRS for a second. All employees will be contributing a base of 5%. There will be a wage adjustment to cover the cost of that additional contribution. Because right now, if you're a DC plan member, which likely many of you are, you're contributing 0, and the city contributes based on your years of service, 5, 6, 8, and 10. So the distribution between your new employee contribution, that's going to be 5 at each level, no matter how many years of service you have, you're contributing 5% now, and the city will contribute an additional amount as well. But so that's changing, and there will be a cost, to that gross up amount to cover your FICA taxes, and that will all be included in this wage adjustment. Sir, in the blue, yeah. Okay, so the question is, if you know what you want to do prior to January 1st and you want to speak with VRS before them to model your, potentially purchasing prior service or refund, what do I do?
So if you have refunded service in your record, you have to actually be back enrolled in VRS and be reported to us for a full month before we can run those calculations. So you will want to wait until after you've joined the plan and we have all of your information and Richmond has reported you for at least a month.
There's one question in the virtual audience, and then we'll get to you, ma'am, in the white.
Danetta McQueen, please unmute your mic and ask your question.
Thank you. So my question is there a catch-up plan for individuals who didn't contribute to their retirement, like say for 10 years?
So can you clarify the catch-up plan?
So the catch-up plan, according to the IRS, is that if you have not contributed, you can contribute, say, an extra $5,000 into your retirement plan to get you up to where you should have been if you had contributed the past 10 years. So it's not like the buyback, but it's like I haven't been contributing. I didn't contribute to my IRA or my retirement fund for 10 years. Can I put extra money into the account to get caught up? Is there a plan that I can go by that will allow me to put extra money in to get caught up to what I should have, where I should be now if I had contributed the past 10 years?
Good question. So yes, there is a catch-up option if you're over the age of 50, and there are limits to that. So if you are currently, or if you're not contributing at all, you can go up to the 22,500, and then there's a catch-up amount of 6,500, I think. I know you can get up to $30,000 to put into your 457 deferred comp for the Richmond, for the Richmond Retirement System Mission Square account that you have. So that's
Okay, but does a VRS offer that, or it would have to go into RRS?
So this is VRS. Remember, in the VRS plan, your contributions are fixed at that mandatory 5%. And then the most you can put in for voluntary in the defined contribution side is 4%. There's no, that is all you can put into that plan. You have to remember, on the defined benefit part of the plan, what you put into that account has no impact on what your ultimate benefit is. It's only in the defined contribution part of the plan where the money you put in that's invested affects the money, the amount of pool of money you will have as additional savings at retirement. In the hybrid plan, you are limited specifically to your 4% voluntary and the employer match on that. So any savings over and above that is outside of the VRS hybrid plan and is in that separate City of Richmond sponsored 457.
Oh, okay. So then that leads to one more question into that to add on. So that means that once I go into the hybrid plan, then I can do be in VRS and my 5% contribution and do the catch-up plan in RRS?
Yeah, they're totally separate plans. So in the hybrid plan, you'll make your mandatory 5%, and we would encourage you to make the voluntary additional 4% to get all of the employer match. Once you've done that, any additional savings you want to make would be through the separate City of Richmond sponsored 457.
Great, that's perfect. Thank you.
Yeah, that's a good questions. Good questions, everybody. Okay. Yep. So the question is, January 1st, if you're ready to transition to VRS, how does the deduction from your paycheck work? And we're talking about the voluntary 4% contributions, correct? In the hybrid plan, or any contributions. So Can you hear me? All right. We're still working on setting that up with VRS. They have a defined process for how those interact, but it is actually our HR will be, setting it up so that payroll deducts the whatever amount you've chosen. And doing that all according to VRS guidelines. The 401A. So the question is, so we can elect to have additional contributions taken out. That's what we call the voluntary contributions, right?
If you're in the VRS plan, your mandatory 5% will automatically be set up in payroll because it's mandatory. So your HR and payroll department will, if you make that election, they'll make the set it up in the system so that your 5% mandatory contribution comes out and goes to the two appropriate places. If that's the hybrid mandatory contribution of 5%. If you want to make the voluntary contributions that a 0.5% to 4%, where you get the additional employer matching funds, that is something that you have to elect, and that election is made through the third-party record keeper using your DCP account access online account or by calling them. You cannot make that election until HR has gotten you enrolled in the VRS system. So that whole process, there will be more information that your HR department will share with you in terms of how that process is going to flow. But there is a deadline for each quarter for making those voluntary contribution elections. But you have to make the election, and then the record keeper tells your payroll department. Yes. Yes, the question, just to clarify, the mandatory 5% will be set up automatically and will come out of your paycheck, but you as an employee have to make an election through the third-party record keeper Mission Square to sign up for voluntary. That doesn't happen unless you actually make that election.
And add on to that, and Sally, jump in if the try again. Okay. And the quarterly flow of that is, let's say right now you're, in the hybrid plan, you have until the 15th of the end of the quarter, so December 15th, for example, to change your choices for the next quarter. You can say, oh, I want to do 4% one day, the next day I go and I make it 3%. Whatever it says on the 15th that you've chosen is what is going to be in effect for the next quarter. So you can change it anytime up until that point, but what you've chosen as of the 15th will go into effect. If it's December 15th, that'll happen January 1st through April. Does that make sense? For your voluntary elections, the mandatory 5% taken out every paycheck. Oh, the question is, does that voluntary contribution come out of your paycheck, or do you have to write a check? Great question. Thank you for clarifying. It will come out as a payroll deduction, I believe. If there's any updates to this, we will inform you, but that is the best knowledge as of right now as to how it will work. Great question. So what is the percentage of the employer match for the voluntary contributions? Because when the state, it was not 1-to-1.
Yeah, thank you for that question. The match on the voluntary, it's dollar for dollar on the first 1%, and then it is a 50% match. So if you put in 0.5% or 1%, the employer puts in 0.5% or 1%. Over that, it's a 50% match. So if you put in the full 4%, it is a 2.5% match. Good question. Sorry, I missed that.
Any questions in the virtual audience? Yep. Okay.
Tammy Sims, please unmute your mic and ask your question. Ms. Sims, we still can't hear you if you're speaking. Tammy Sims, are you still interested in asking a question? If you are, please unmute your mic and ask your question. William Gerber, please unmute your mic and ask your question.
Yes, I just had one more question. Does the RRS do matching like the VRS? What I just heard, the percents.
No, so, and I heard, I think
Like
everybody
when you
heard the
do the
question.
voluntary
No,
contribution?
there's no match.
There's
I'm
no
sorry.
match with the RRS. Okay, that is what I was curious about. Thank you.
Okay. Mhm. Yes, go ahead. So the question is, if you currently have a 457 with the Richmond retirement system, can you sign up for the Virginia retirement system's 457? If you planning to transition to VRS? Oh, you are, okay. So you can continue to stay with the Richmond retirement system 457, but there's,
It gets very confusing with the 457. Know that 457 just refers to a section of the tax code. So there are a lot of different plans that are under the section 457 of the tax code. In the hybrid retirement plan, the voluntary contributions you make fall under that section 457. It's a tax rule sort of thing. So in the hybrid plan, only your voluntary contributions within the description of the hybrid plan rules goes into that hybrid 457 account under the VRS hybrid plan. Okay, so that's the one though, because it's in the hybrid plan, those voluntary contributions do have those matching employer contributions from up to 2.5%. Thank you. And that's sort of the hybrid plan by itself. Then Richmond's 457 is sort of a separate plan that Richmond sponsors that has its own separate rules, and they're not related at all, other than the fact that you have to remember there are IRS limits on all 457 plans combined.
the question was, if she chooses to stay with the Richmond retirement system, what are the changes? And then the second question is, where can I go to find information on your certain plan? So if you're planning to stay with the Richmond Retirement System, yes, there will be some changes to your employee contributions. There'll be a required 5% contribution that will come directly out of your check. It's just the money goes to the Richmond Retirement System it will go to the Mission Square, your 401A account. The employer still puts in money based on up to 6, 8, and 10%. If you want to find out what's in your balance right now, you can go to Mission Square. I think it's www.missionsq.org. You log in and you'll be able to see what's in your balance right now. But there will be a required contribution at the beginning of the year for all employees that stay in the Richmond Retirement System. Oh, so yeah, www.missions, as in Sam, q.org. That's the Mission Square website, and you'll have to log in to get to your account. You good? Okay. Yes. For VRS? Yeah, it doesn't change. Go ahead.
I'm sorry, the question is, if you wait until October to join VRS, what other benefits do you have from January until October? And are you speaking of the benefits that I discussed on the slide here? Okay, so, all of the benefits that were discussed in this presentation relate to the hybrid plan. So for example, the VLDP membership, you have to be a member of the hybrid plan to be covered in that program. So all of the benefits that were discussed in this presentation apply only if you are a member of the hybrid retirement plan.
So the question is, what's you'll have, if you go in January or if you wait until October, January, you'll have 10 more months than October if you go in October. It's the time, but there's no change in the benefits. There's no, I mean, it's the same. What she presented on is what you would receive in January, and it's the same benefit that you'll receive. No, nothing changes. It's just your start date, of course. So it'll be October 1. If you decide to do it April 1, if you decide to do it January 1, you'll go into the hybrid plan, and what she presented on is what you would get. I think that's what.
And the only other thing I would add to that is, remember, so for example, the 1-year waiting period on the VLDP, if you wait and don't join until October, then October is when your 1-year waiting period starts. So all of the hybrid benefits start and the rules apply based on the date that you start under the hybrid plan. Like vesting and eligibility for benefits, it all starts when you come under the hybrid plan.
I think we have a virtual question.
Tammy Sims, please ask your question if you can unmute your mic.
Can you hear me?
Yes. Go ahead, Tammy. You're muted, it looks like. Tammy, make sure you unmute yourself to ask your question. We can't hear you. Okay, Tammy, we'll take another question from the virtual. Oh, there you are. Go ahead and unmute. Go ahead. Okay, we will take another question from, I saw someone's hand go up in the virtual audience. Tammy, let your, put your question in the chat if you can.
Please unmute yourself and ask your question.
This is Courtney. My question is, if we decide to start with VRS in January, will the wage adjustment start in January as well?
Yes. And so the wage adjustment is going to start for everybody. So if you are not sure enough to make your decision as of January 1st and you are going to wait until March, for example, your wage adjustment will still happen January and you will begin contributing the new 5% in RRS. Okay, so that's happening across the board for everyone, regardless of whether you've made your decision January 1st or not. Does that answer the question?
Yes, thank you.
All right. Yeah.
Meldon Jenkins, please ask your question if you can unmute your mic.
Yes, can you hear me?
Yes.
It seems that a lot of us are totally confused and we need written materials that take us from step one throughout the process. Where can we obtain those materials?
Great question. So we are working on setting up a site where you will be able to access this information that will be disseminated to you by email, just as the information session dates were. So please keep an eye out for that. And, the next couple weeks, I think VRS and RS can probably speak to where you can find materials related to those plans as of now. Also, if you do have specific questions, you can email VRS transition questions at rva.gov. That email box is the email box that sent out the session dates. So if you can go back to that email, you'll find it in the emails that have been sent out already.
Okay, thank you.
And just, this is VRS, just to follow up on that, the hybrid public website is at varetire.org/hybrid. And that's the best place to get a lot of good information about the plan.
Thank you.
All right. Any other virtual questions? Nope. Okay. Any other audience questions in the room? No. All right. So again, keep an eye out for more information. We do have additional sessions. You may have seen the updated schedule that was sent out yesterday. We have our next hybrid plan session that's only in person, no virtual option. Up. Okay, one more virtual audience question. So I'm going to pause what I was saying so we can take that question. Go ahead. Two more. All right.
Gill, please ask your question and unmute your mic.
Can you hear me?
Yes.
Hello. Yes, I just want clarification regarding the buying back service. If you have worked in the public sector in another state and you have taken those funds, are you able to buy back that 48 months?
Yes, to purchase that service, if you have that service like in another state, once you're active in the plan, there is an application process that you can go through to apply to have that service added to your record. And so you would want to call us at VRS once you're active in the plan and we can walk you through that. But it's basically you have to apply for it and you have to remove all funds. You cannot be entitled to any benefits from that retirement system. And if that's the case and you don't have any other purchase service in your record that hits the 48-month limit, then yes, you can purchase up to 48 months of that service.
Thank you.
Valerie Kirby, please unmute your mic and ask your question.
Okay, good morning. I have a couple of questions and they've been asked somewhat, but I need a little more clarification and elaboration. What is the rate of interest that must be paid in order to purchase refunded service? And is it based on the former salary that you're trying to repurchase? That's question one or part two. And then my next question is, would you elaborate more on the salary adjustment? So does that apply to people that are transferring over, not transferring over, the percentage, et cetera? Give us some good information and thank you very much.
Okay, so for refunded service, for refunded service, your pay rate does not affect that cost at all. You basically are going to pay repay the refund plus the interest. That interest rate is on the public website. I want to say it is 6.75%, but I would have to look that up on the website. So I apologize for that. And it does change periodically. So you can always check for what that current rate is on the website, the VRS website.
So it's based on, thank you so much for that. So it's based on your salary that you left at the time of service. If it was 15 years ago, whatever that average salary was, or how does that work? I'm still a little confused with that.
Yeah, so your salary does not impact the calculation at all. It's based on how much money you received as a refund. So if you got $1,000 and it was 20 years ago, you have to repay the $1,000 plus interest compounded every year over 20 years.
Okay, I got that.
Okay,
Thank you.
So it's the amount of money that you received, you have to pay back to the trust plus interest. And that interest rate does change every now and then. And again, I apologize, I don't know that off the top of my head.
Thank you. And the salary adjustments, the next question. Thank you so much.
Yes. Thanks. So I can talk to that piece. The salary adjustment will go into effect at the beginning of the calendar year next year in 2024. As mentioned, if you're a DC plan employee, right now you as the employee contribute 0 to your account. The city contributes based on your years of service. In the next year, everyone will be contributing 5%. So if you're a DC plan employee, your salary will be adjusted by 5% to cover that increase, plus an additional amount of 0.72 is the calculation to cover the changes in your FICA taxes. We can't, make any cover. We can't, account for state and local. State and federal taxes, but the FICA tax increase will be mitigated by this gross up cost and the cost of the additional contribution. So that is what the wage adjustment is for. And that I'm speaking only to the DC plan because I imagine, are there any DB folks in the room?
Defined benefit, I think, the one with the guaranteed pension.
Defined benefit. Yes,
So-
we actually we do have someone in the room who has a question about defined benefit. So I'm gonna let her ask that piece. Yes, that is correct. So if you're in the defined benefit plan and you're a general employee, your base, if you're in the basic plan, you're contributing 1% as your base. So your base will go up to 5%. So your adjustment will be that additional 4% plus the gross up cost. So everyone will be adjusted according to what RRS plan they're in and what the additional amount that they will be required to contribute is. Okay.
Kirby, does that answer your question?
So everyone is going to get an adjustment, whether you're in a defined benefit or the defined contribution plan. Is that correct?
Yes, that is
All
correct.
right. Thank you so
Mhm.
much.
Yep.
Liam Gerber, please unmute your mic and ask your question.
Last question, I promise. This is for RRS and VRS. If I have, like, say, something from an old retirement account, say like $40,000, can I roll that into either plan?
Hi, this is Kia with RRS. You can roll money to your 457 if you have that. You can do that, or you can roll it into, if you're in the 401A, you can roll it into your 401A defined contribution account.
And this is VRS. If you are in the hybrid plan, you can roll over pre-tax, qualified pre-tax money into the hybrid 457 account.
Thank you very much.
All right. Well, I think that may conclude our first session for today. We hear now. Okay. Thanks everybody for attending. Please, attend a future session on the hybrid plan or whatever plan you want to learn about. Make sure you look at that schedule of sessions and sign up if you're interested in attending again. Thank you for your questions, and please contact VRS Transition Questions at rva.gov if you have more questions about this process. And we will be informing you through that email box as the forms and the process develops for your election starting January 1st.